Welcome to TFN Smart Trading. I'm Laura Cadden. As Earth Day approaches, our segment will focus on a topic of interest to the socially conscious, but also with enough potential to intrigue all savvy investors and traders. The continuing concern over our carbon footprint has been ramped up lately, particularly in Europe, where there is a fear of falling short of the Kyoto Protocol targets. In the UK, for example, the government has begun a direct mail campaign to its citizens to emphasize the need for energy efficiency in the home, even offering grants to elderly and needy tenants to assist with the cost of insulation. In the U.S., the Environmental Protection Agency is looking at potential regulation of carbon emissions, and a Democrat in the White House would most likely accelerate the effort. I've asked alternative energy speculators Nick Hodge to offer us insight as to who benefits from the carbon reduction push. Welcome back to the show, Nick.
Hi, thanks for having me back.
So let's jump right to it. Cui bono, who benefits?
Well, first off, the entire world benefits from cleaner air and a cleaner environment. But if you want to get into monetary benefits, we're talking about environmental consulting firms, carbon capture and sequestration firms, and obviously getting touched secondarily, we have the renewable energy industry as a whole.
So you said carbon
capture and sequestration.
And sequestration, or storage.
Or
Sometimes
storage.
They call it that, right?
Exactly.
CCS. Tell me a little bit about CCS technology. Is it viable?
Well, to be honest, when I first came across this technology, I thought it was kind of a way for dirty coal to cover up their operations and kind of portray a clean image. But the more I got to thinking about it and looking at the numbers, we have 40% of the world's electricity coming from coal, and that's not going down significantly anytime soon. So what we're going to have to do is we're going to have to clean up the dirty coal operations, and one of the main ways to get that done, as the IEA has said recently, is with carbon capture.
So how does the technology work, though, exactly? If you basically, obviously, it's pretty complex.
The best technology in the field right now is Mitsubishi Heavy Industries KM-CDR technology. That technology, along with most other CCS technologies, are post-combustion, which means they harness the carbon emissions as they come out of the flue. And then the carbon emissions via carbon dioxide are either injected into geological formations, deep sea formations, or used to stimulate dwindling oil wells.
So is this a good investment, Mitsubishi?
Well, Mitsubishi is more of a value stock, and of course carbon capture isn't the main part of its business. So what I'm looking for in this space is maybe some growth companies who are young, but as the carbon markets develop, are going to see increased value and growth. And
are they along the same lines, or are they more like pollution equipment?
Well, sure. Carbon capture doesn't just happen at power plants. We're also looking at factories, metal smelting factories, rubber factories, chemical factories, and things like that. So if you can find a smaller company who specializes in air quality control or emissions reduction, I think they're really going to benefit going forward from cleaning up these smaller operations as opposed to the large coal power plants.
And with that is with things like filters?
That's exactly right, with things like filters and better HVAC units, hood fumes, which capture the fumes in chemical industries, and all kinds of things like that just generally reduce the amount of emissions coming out of a factory, whether they be carbon, sulfuric, or nitrogen-based.
Oh, across the board.
Exactly.
It's because it's done by particulate, I assume.
That's
what
correct.
It captures. So is this a stock you're recommending to your readers that you could share with us?
I haven't yet, but I will tell you about it now. The company is called Seco Environmental. The symbol is CECE. They just announced 30 new contracts worth well over $2.5 billion, so you can already see that the money is starting to flow their way. Beyond that, they have some insider buying going on, which last time that happened, they nearly doubled in price, so it might be a good time to take a look at that company.
Well, great. Thank you so much.
No problem. Thanks for having me.
Nick is always finding exciting opportunities for the green investor. To learn more about his new service, Alternative Energy Speculator, click directly on the screen or sign up for Green Chip Review, which is a free service, and you can do that by going to www.greenchipstocks.com. For Nick Hodge and today'sfinancialnews.com, I'm Laura Cadden.
Realistically, it's as high as $73 or $74 a barrel this summer.